Could Bitcoin really hit $100,000? For years, that number has been a mythical milestone, a target that felt more like a dream than a realistic financial forecast. But today, with major shifts in the market, the conversation is changing. In this video, we're going to break down the hard data, expert analysis, and key factors to determine if Bitcoin hitting $100,000 is not just possible, but plausible. We'll look at what could propel it to that price, and just as importantly, what could stop it dead in its tracks. This scarcity is hardwired into its code. A key part of this design is the halving, an event that occurs approximately every 4 years. The halving cuts the reward that miners receive for validating transactions in half. This means fewer new Bitcoin are created over time. The most recent halving in 2024 has once again reduced the flow of new supply entering the market. Think of it this way: when supply goes down and demand goes up, prices tend to rise. It's basic economics. The halving creates a predictable supply shock. The biggest game changer has been the approval of spot Bitcoin ETFs, or exchange-traded funds. These financial products make it incredibly easy for both institutional and everyday investors to gain exposure to Bitcoin through their regular brokerage accounts, without the complexity of managing private keys or crypto wallets. The inflows into these ETFs have been staggering, representing a new, powerful, and potentially more stable source of demand. It's portable, easily divisible, and its supply is verifiably scarce, just like gold but in a digital form. This narrative is gaining traction, especially in the current macroeconomic environment. Around the world, we're seeing persistent inflation and aggressive money printing by central banks. As the purchasing power of currencies like the US dollar weakens, investors naturally look for assets that can protect their wealth. Many have turned to Bitcoin as a potential hedge against this currency devaluation. The logic is simple. If the supply of money is infinite, but the supply of Bitcoin is finite, then over the long run, Bitcoin should hold its value better. However, it's crucial to approach this with a critical eye. While the inflation hedge theory is popular, academic research paints a more complex picture. Studies have shown that Bitcoin's correlation with inflation isn't always consistent. Sometimes it works as a hedge, and other times it doesn't, often behaving more like a high-risk tech stock than digital gold. Some analysts even use historical data from past halvings to project future price peaks. For example, by looking at the price multipliers from previous cycles, some models predict a potential peak well above $100,000 in this current cycle. While these models are speculative and based on past performance, they highlight the powerful effect that supply constraints can have on price. So, with all these bullish factors, is $100,000 a sure thing? Absolutely not. It's essential to understand the risks, which are substantial. First and foremost is Bitcoin's legendary volatility. Throughout its history, Bitcoin has experienced massive price corrections of 50 to 70% or even more. Even if it reaches 100,000, there's no guarantee it will stay there. A wave of profit-taking or a shift in macroeconomic sentiment could easily trigger a sharp sell-off. We've already mentioned the risk of a regulatory crackdown, which could evaporate demand overnight. There's also the risk of overvaluation. If speculation drives the price up too far, too fast, without the underlying demand to support it, it could create a bubble that is destined to pop. And finally, we can't ignore the competition. While Bitcoin is the king of crypto, thousands of other digital assets and altcoins are competing for capital and attention. A major technological breakthrough or a shift in investor preference towards another asset could divert demand away from Bitcoin. So, let's put it all together. The path to $100,000 is plausible, but it's narrow and filled with obstacles. For Bitcoin to realistically reach that target, several things likely need to happen. We need to see sustained high inflows into the Bitcoin ETFs. Long-term holders would need to continue accumulating and holding their coins, further constraining the available supply. The macroeconomic environment would need to remain favorable, with investors continuing to seek safe haven assets. And crucially, the regulatory landscape would need to be supportive, or at least not overtly hostile. What about the timeline? Expert opinions vary widely. Some analysts believe that the peak of this cycle could push Bitcoin to $100,000 or beyond within the next 1 to 3 years, possibly in 2025 or 2026. Others argue that market cycles are getting longer and that it might take more time for the full impact of institutional adoption to be felt. Ultimately, the journey to $100,000 is one possible scenario, not a guarantee. The bullish case is strong, built on proven scarcity, growing institutional demand, and macroeconomic tailwinds. But the risks are equally real, from regulatory threats to extreme volatility. The most important takeaway is this: never invest more than you are willing to lose. Do your own research, understand your personal risk tolerance, and always think long-term. If you found this balanced analysis helpful, please give this video a like and subscribe to our channel Wall Street Signal for more deep dives into the world of crypto and investing. Thanks for watching,